Peter Cecchini, first to you. Let's trade this close. You are Global Chief Market Strategist at Cantor Fitzgerald, in case anyone was wondering, and a regular on Closing Val. You've been cautious. You've been cautious on this market all year long, right? So now we've had a pretty strong week, best of the year. Do you trust the rally?
Nice to see you guys. Thanks for having me. No, I don't. I mean, I think this rally is somewhat reminiscent of some of the bounces we saw in 2018. In particular, there was a bounce in October, which really ended up being something of a rotation rally, which is, I think, to some extent what we're seeing in this one as well. If you look today, we're really seeing a rotation into defensives. We're seeing underperformance in many of the cyclicals, the transports, consumer discretionary, regional banks are all underperforming relative to the defensive names, especially consumer staples. So I don't really trust this rally. I, in fact, expect rallies like this to occur even within the context of our more bearish view.
Peter, is that why the Russell's underperforming, and is it a buying opportunity for the Russell?
I don't think it's a buying opportunity for the Russell. In fact, I think it's a little bit of a tell that the Russell's weak. Russell's obviously impacted to some extent as well by what I mentioned, which is that it has about an 18% exposure to regional financials. But again, I think that's telling. If the economy is going to do well, and frankly, if the markets more broadly are going to do well, regional financials also need to do well, which of course is difficult when the 3-month to 10-year curve is 25 basis points inverted, which is, to me, quite a bad sign.
I mean, if you look at, Peter, what's gotten the market excited this week, maybe it's just an oversold bounce, but there's also some drivers. Look, Federal Reserve key members, including Jay Powell, have started talking more about flexibility around, for instance, the tariff impact, suggesting they could cut rates. You have a potential delay here on the Mexican tariffs. You have maybe some signs that Xi and Trump are going to talk at G20. If all of that goes right, do you change your view?
Yeah, look, there are some convenient attributions that could be made here. I could go through a scenario where, in fact, the Fed puts a 25 basis point cut in President Trump's pocket into the G20 meeting. I don't think that's going to happen, though. That would seem fairly transparent to me as an interdependent Fed and executive branch, which I don't think is the message that the Fed wants to send to the markets. So I don't think that that's going to happen. I think, as I've been writing and talking a little bit about on this show, the Fed's going to remain reactive. Unemployment is quite low at 3.6%. PMIs are still generally in expansionary territory. And I don't think the Fed's going to act preemptively here just yet, despite the fact that clearly central banks are now harmoniously talking about risk to the downside. I just think it's a bit early, and I think, frankly, the market might be expecting a little bit too much out of this June 20th meeting, or
Peter,
19th meeting.